If I could only teach you one concept from this entire course, it would be this one. The parallel channel is the foundation of two of my three active strategies. Every session before I look at anything else, I draw the channel. The channel tells me the direction, the channel tells me my exit point. Without it, nothing else makes any sense. A parallel channel is two parallel lines containing price action. One connects the highs, one connects the lows. Price moves between them in a structured, predictable way. As you can see here, we've got the highs, we've got the lows. 1, 2, 3 beautiful taps in the discount. We hit the premium once. This is not random. Price respects these boundaries because they reflect the balance between buyers and sellers. When buyers are in control, the channel angles upward. When sellers are in control, it angles downwards. The channel is not a prediction. It's an observation of what the market is already doing. Here's how I draw a channel. 3 points, A, B, and C. As you can see, we've got point A, we've got point B. Now what validates C is when we close below point B, right? When we take out B's lows, that is what validates point C. Point A, the first significant swing low, where the trend begins. Point B, the first swing low after A. Price dropped from A to B. Now price pulls back, makes a higher low, a new point. That's point C. But again, C is only validated once we break B's lows. 3 points, 2 lines, the channel is confirmed when price touches the upper boundary of C. That's the third touch. Let me do this on a second example. Okay, so we have point A, we have point B. What happens? We draw the line from point B through there. When that line gets broken, then we have a valid point C, right? So C is right here at the top, C. Now let's draw the channel out. Get your parallel channel. If you don't know, parallel channel is up here, located on the left in your toolbar. Click it, it will open up. Come down to channels, favorite it, parallel channels. You're going to be using it quite a bit, okay? So we go through point A. Oh, hold on. Let's do that again. There we go. Point A through down point C, and we keep dropping this down. Notice I'm not forcing the channel to fit. If the lines don't align naturally, the channel isn't confirmed. Sometimes price will poke out of the channel, it'll come back in, but it is also, keep in mind that it is a dynamic process. So you can see here from A to B, we run it through the high of C, right? So here we go, we'll run it through the C mark there. Okay, we're running it through C and price pulls out, but then we get this leg down here which pulls right out. Now again, if price breaks the low, then we're going to run it through the top of that until the channel breaks. And you can see price rallies down, goes into the premium, comes back up and breaks outside of that channel. That break outside of the channel indicates that this channel is completely done. Now, there's a couple of things that are notable to a channel. Obviously, we have the discount. There we go. And we also have the premium. Okay, the premium and the discount. The discount is the line at the top of a bearish scenario. That is what we call the discount. Anywhere from this midline upwards is the discount. Anything from the midline downwards is what we call the premium. The lower 50%. Think about this from a value perspective. Buying at a discount in a bullish channel means buying below the midpoint or where price is ranging. You are buying at value. Smart money buys at value. Buying at a premium in a bullish channel means buying at the top of the range after price has already run. That's the worst location you can enter. Most retail traders buy here. They see price going up and they buy. Then price pulls back to the discount, which is where it was always going to go, and they get stopped. It's about how you look at the market and how you perceive the market more than what you think is going on with the market, right? A lot of things that we've taught when we were in our educational phase as traders is if it's going up, buy, if it's going down, sell. And theoretically, that is spot on, but you've got to do it in a way that works to your advantage. As you can see, point C is a pullback from A to B, right? There's D down here. Let's go put in D. There is E also, right? So we don't want to trade back to the upside from B to C. Look at that move. It's tiny, right? If we got a trade here and we're trading back into the discount, that's 268 points, right? Versus if we're trading from point C down to point D, we're looking at 737 points. There's a substantial difference. And you'll also see that in the price action, right? Coming back into the discount from premium, look at that price action. It's pretty much sideways. But look what happens when it takes off from a discount into a premium. It literally runs. And that's what we want to be on side of. Again, from D to E, price comes up and it just accumulates sideways. But E down to the premium, again, it drops. Boom. It comes, drops, pulls back and drops again. That's exactly why we use these channels. The channel sets my daily bias. Before every session, I look at the 1 hour chart, draw the channel and ask one question. Is this channel bullish or bearish? A bullish channel, I'm only looking for longs. Only in a discount, no shorts. In a bearish channel, I'm only looking for shorts, only in a discount. I'm looking to trade from a discount into a premium. We're not looking to long in a seller's market. We're not looking to sell in a buyer's market. Please keep that in mind. In a bearish channel, the discount zone and the premium zone flip in terms of entry location. The upper 50% of a bearish channel is where prices at relative discount at recent highs. And that's where the short entries live. And sometimes the channel is transitioning. Price is broken out of one channel and hasn't confirmed a new one yet. In that case, I wait. No channel, no trade. Draw a channel before every session. It takes 2 minutes. It tells you direction. It tells you the location, and it eliminates a huge percentage of bad trades before you even look for an entry. Episode 5 is liquidity, why price sweeps your highs and lows before reversing, and how I use it. I'll see you then. Ciao.